Okay, there. Before anything else, just wanted to make sure that everyone can see the screen and the audio is clear. Got it. So hi, good morning everyone. So apologies last session. I think I completely forgot na I didn't record the session. So if I think naman you guys are notified every time we record. So pag hindi niyo nakita yung recording message, kindly let me know so that we can double check whether I'm recording it or not. But as promised, I think I've already uploaded both the quiz recording and also the chapter 5 exercises re-recording. So kindly let me know if there are any questions. I think like what I've mentioned, more important than the actual results of our third quiz, I think what's more important is how we're gonna be bouncing back or learning from it, right? So in similar fashion naman, I feel like in terms of academics, the most important thing is that we learn, and then these are things that we can bring moving forward. So kindly take the time to review the quiz 3 so that you know what to expect in terms of the time limit. So quiz 4 would be the same mechanic. So hopefully we're better equipped in terms of parang organizing and structuring. Personally, I feel like inventory or accounting for merchandising options is easier compared to accruals and deferrals just because uh hindi siya parang it doesn't take a lot of analysis. I think I promise you that you'll do well as long as number 1, you master the journal entries. Number 2, you really understand the underlying context between the differences between perpetual and periodic. So if I ask you what are the 3 key differences, you should be able to tell me kagad parang okay, in purchases, these are the differences. In sales, these are the differences. In closing, these are the differences. As long as you have a very neat and organized way of solving, I think that a lot of everyone can get a really high score. Second, another lesson that we learned in quiz 3 is that never take theory for granted. Like what I've mentioned, anything mentioned in the handout or anything mentioned particularly in the simplified PowerPoint that I always upload is free game in terms of um, theory. So if alam nyong parang honestly minimemorize nyo lang, it would be better to refer to the handout, refer to the PowerPoint, and refer to Waygun. So basahin nyo lang ng isang pasada so that the simple points from theory can help boost your points. In terms of the grading, so moving forward, for the sake of fairness sa batch, the professors decided na in terms of quizzes, there will be no partial points. Meaning, if ano yung score nyo sa OVLE, meaning reflected objectively in the required given, then that would be your grade. So, the only time that we'll regrade it is like, for example, tama naman yung answer nyo pero nilagay nyo ng comma. So, for that, that's definitely acceptable. So again, super important pa rin yung solutions just so that we can understand where thought process are coming from. But ultimately, what's important is the required. So again, every time we encounter a short problem, always start with reading the required and then imagining, okay, so they're asking me for journal entries. So, okay, ito lang yung gagawin ko. Pero pag ang tinanong sa inyo is balances, like what are the total liabilities, what are the net income, and then it's a chain problem, know that whenever you adjust, whenever you correct, you have to make sure na i-adjust nyo rin yung total. So parang technically magpo-post kayo, right? So those are just some of the watch out. So don't worry, for today I understand parang there's a lot of anticipation for quiz 4. So honestly, in terms of our timeline, we only have 3 sessions left before our long exam. So why 3 sessions left? So basically this week, Thursday, and then Tuesday, Thursday next week. And then the next week, so the days before November 5, that would be a free week for you to really study at your own pace. So if ever you want to schedule consultations, kindly do so within that week. Another thing, I'm thinking of moving the deadline of our exercises for chapter 6 to Thursday next week. siguro what I can do is just incentivize the people that would submit on Tuesday, by Tuesday. So para I'll probably give like extra points. Another thing, I will also give bonus points to people that give or suggest exercises from Waygan that's different from class. And then so I'll just upload the mechanics later. But in general, so syempre I really want to help in terms of participation. Again, I'm willing naman to give the 10%. Just make sure that you put in the effort. So number one, I'll be providing like a bonus for early submission for Tuesday. But the chapter 6 would be exercises would be due on Thursday next week. And then second, if you give me items that's not covered in our class with accompanying solution in Waygun, na correct solution, I'll also give like siguro like 10 points per question depending on how thorough the short problem is, right? So if naghahabol kayo to get perfect, kung gusto niyo maka-perfect yung yung 5% niyo given the midterms, then kindly take those opportunities. So I think those will be the last bonus opportunities for quite a while. And then I'm not sure whether I'd give. So it really depends also in terms of class performance. Yeah. So with all of those admin stuff out of the way, basically I wanted to segment this session to two, right? So one, I want to review us for accounting for merchandising options. So gusto ko pasadahan lang natin one more time so that ma-absorb nyo. Because chapter 5 is very crucial before we jump into chapter 6. Like what I've mentioned, chapter 5 and chapter 6 in essence is all about inventory. And therefore, kung nalilito pa kayo sa perpetual at periodic, medyo sasabog yung utak niyo kapag nag-FIFO, LIFO na tayo later. Kasi aside from like perpetual, periodic, two different inventory systems, there are like 3 ways to solve for like costing of inventory. So there's like 6 iterations, right? So parang it's gonna be too much, right? So for those na kinakapa pa rin, hopefully wala naman na, I will just quickly review us. Siguro around 15 to 20 minutes for chapter 5. There will heads up, there are some new things that I'll be mentioning here just to really instill some of the concepts, right? Particularly when it comes to sale returns and allowances. There are a lot of iterations kasi when it comes to those things. So kindly make sure na even if we're reviewing, you still put in parang pay close attention. So with all of those admin stuff out of the way, we can officially begin our review for chapter 5. So like what they mentioned, in context, chapter 5 is really all about inventory, right? And in terms of inventory, again, I want everyone to be really clear and really memorize the definition of what inventory is. So an inventory is an asset, right? That can be 3 things. They're held for sale in the ordinary course of the business, so they're finished goods, or they're in the process of producing production, work in process, or in the form of materials or supplies to be consumed in the production process or in the rendering of services or raw materials. So in terms of presentation, generally, inventories are presented as current assets in our financial statements, right? And in terms of your worksheet, your inventory will obviously have a debit balance because it's an asset. So in terms of affected columns, it would appear in your adjusted trial balance, definitely, and in terms of your balance sheet component, right? In terms of the worksheet, right? So that is the definition of inventory. Now, in lieu of parang talking about inventory, we mentioned that companies that typically use inventories can be categorized into 2, right? So definitely there's like a service type of company, pero usually they render service, so wala silang inventory. But the 2 would be merchandising company and manufacturing company. So later, when I talk to chapter 6, we'll appreciate the difference. But in general, what sets them apart, particularly merchandising, is that they have a different way of categorizing expenses, right? So for merchandising operations, they've expounded upon the simple equation that we had before in chapter 1, chapter 3, na revenue minus expense is net income. So again, the unique feature for merchandising operations is that they break down their expenses into two. So they have your cost of goods sold, basically the cost of the product or the cost of the merchandise you sold. So for example, I wanted to sell, I don't know, like a VR or something. And then the cost of that is around $500, right? So I bought it for 500, sold it for 800. So my revenue would be 800. My cost of goods sold would be 500 and my gross profit would be 300, right? So the cost of goods sold pertains to the cost of the merchandise that you bought from your supplier. This is very different from your operating expenses. So other expenses completely unrelated to your product, right? And we also mentioned na cost of goods sold is not just your purchase price, right? Sometimes you pay for the freight, right? Or freight in. So whenever you pay for the freight, it increases the amount of your cost of goods sold. And again, another thing to note, before an inventory becomes they are cost of goods sold, their inventory first pag hindi pa sila nabebenta. Therefore, logically, your purchase price, your freight in will increase your inventory account, right? But moving back to this particular slide, so now we know na, okay, revenue minus expense is equal to net income or net loss can also be rewritten as revenue minus cost of goods sold minus operating expenses is equal to net income, net loss. And then, the last thing I wanted to highlight here is that there is a matching principle. Go fast forwarding to our journal entries in the sales-related transactions, particularly when nakakabenta ka or there's a sales return or allowance, there would be two entries, right? One to recognize the revenue and one to recognize the matching COGS. Only kung perpetual, right? Kapag kay periodic, we only recognize cost of goods sold at the end. But my main point here is that revenue and the related cost of goods sold will always be matched. And therefore, when you bulk all of them together, revenue minus cost of goods sold will give you your gross profit. So that second iteration of this equation would be technically gross profit minus operating expenses is equal to your net income or net loss. So the reason why I'm really taking my time is that this is super important, right? I really want you to memorize and really master understanding the different relationships. Again, knowing the difficulty of the quiz, be prepared na butas yan, right? Like, hindi parang dalawa, parang ibibigay lang sa inyo yung iba and then you have to solve for X. Since we talked about gross profit rate, you should be able to derive also what would be the gross profit based on a sales number, right? So later I'll talk about gross profit rate if we have time. But again, gross profit rate is what? Gross profit over net sales, right? So you treat your sales as 100%. Your cost of goods sold and your gross profit will just be a percentage of that 100%. So later we'll talk about that in detail. So before I proceed, are there any questions regarding the comprehensive income statement? So this is more of like the informal way of solving it, but make sure na you really master this. Okay, so if there are none, we can proceed na to perpetual and periodic, right? So in inventory, there are two prevailing inventory systems. One is perpetual and the other is periodic. And going by the definition, the reason why perpetual siya is that it has a detailed record of the cost of each inventory purchase and sale. So imagine may barcode. So every time they scan, they can automatically say na, ito yung revenue, ito yung COGS. Every time nakakabenta ka, right? So barcode si perpetual, right? And since it perpetually updates, you recognize your cost of goods sold each time a sale occurs, right? So now, who are the types of companies that use perpetual? Those that have high unit values, right? So furniture, appliances, because it provides better control, right? So high unit values are the ones that have perpetual. In contrast, you have mga Instagram shop owners, right? So syempre, they're not gonna invest in a barcode. They'll probably they'll buy like 50 t-shirts, right? And then when they sell that t-shirt, bibilangin lang nila, okay, I bought 50, 20 na lang yung natira. So probably I sold 30, right? At the end. So now, they can only determine their cost of goods sold at the end when they conduct a physical count, right? So periodic usually refer to small merchandising businesses, right? So with that said, there are key differences between perpetual and periodic, but the operating cycle remains the same. And there are 3 phases and 9 concepts that you really have to master. So for this, we're gonna be, I'll trust that you will really master each of the concepts, right? So you have 9 concepts broken down into 3. Your purchases, your sales, and your end of period. So your adjusting entries for when you conduct physical counts and your closing entries, right? So now, the best way is to actually identify ano ba yung differences nila, right? Per every phase. So in the purchase related phase, basically you have 4 journal entries, right? You purchase your inventory, and then you have FOB shipping point. So we're in the POV of the buyer, right? So pag FOB shipping point, we record. Pag FOB destination, we don't. Ang magre-record is si seller. So they will record a freight out expense and then corresponding cash, right? Pero si seller yung magre-record. Tayo wala tayong i-record. It's not even an expense on the buyer's end. It's an expense on the seller's end. So talagang wala tayong entry, right? And then, purchase return and allowances will lessen your inventory because it lessened the amount of money that you had to pay out for your inventory. Same idea with purchase discount taken. So those are the 4 concepts under purchase transactions. Now, the only differences would be yung sa perpetual, it uses the permanent account inventory. On the other hand, sa periodic, it uses temporary accounts. So it has your purchases, your freight in, which increases your inventory, right? So they have a normal debit balance. And then you have your purchase return allowance or PRA and your purchase discount or PD that decreases your inventory. And therefore, since it's a contra inventory account, it has an opposite normal balance. So inventory has a normal debit balance. So therefore, the PRA and the PD has a normal balance that is a credit, right? Because it's a contra inventory account. So that is the first periodic nuance. So that's the first key difference. And then, we basically had this example just to highlight na it's literally the same in terms of the values, even the other accounts. Ang nag-iba lang is that every time may inventory, we change it to temporary accounts. So purchases, freight in, PRA, and PD, which we will eventually close at the end of the period. So we will always close these temporary accounts at the end of the period, right? Unlike sa perpetual, straightforward yung closing niya. Kasi inventory is already a permanent account, right? So kindly let me know if there's any questions here. So now, we move on to the second phase. So we have the sale phase, right? And you have basically around 8 journal entries, right? So when you have a sale, when may nag-return and may discount, and then may freight out expense. So bakit may freight out expense? Because if you're in the POV of the seller and you paid for the freight, that's not gonna affect your inventory. That's gonna be an outright freight out expense. That would you'd be paying by cash, right? So as you can see, sobrang pareho yung journal entries for sales. The only difference is a perpetual, since it recognizes cost of goods sold every time a sale occurs. It has 2 entries every time you have a sale of inventory and a sale return and allowance. So itong dalawa lang yung pinagkaiba. Si periodic, wala. Because it will recognize cost of goods sold at the end of the period, right? So again, si perpetual recognizes COGS every time an inventory is sold or merong sales return or allowance kasi you have to reverse a portion of the COGS recognized. And then si end of period, we will discuss later in the third phase how you compute cost of goods sold for periodic, right? So basically, we had this example. So in essence, every time you had a sale, you recognize one to recognize the sale on credit and the other to recognize the matching cost of goods sold. Pero sa periodic, isa lang, the sale, but no entry to match COGS. For this, when you paid for shipping costs, this is a freight out, right? So it's not gonna affect your inventory. It's just an outright expense, right? Which is something that we have to close. So parang expense lang siya, right? Now, the new thing that I want to discuss is in relation to the sales return and allowance. Ngayon, I don't know if napansin niyo, but in Waygunt, there's actually a lot of iterations. So the original iteration was Shepherd Co was granted an allowance of 20,000 for merchandise costing 10,000. So we know that it's probably gonna be debit SRA, accounts receivable 20,000. So again, one of the common mistakes na I saw in the exercises given was that people always put service revenue here kasi they think i-reverse mo lang. But again, super important that it's a debit SRA or sales return and allowance, which is a contra revenue account, right? So kindly take note na always use SRA pag sales return and allowance. So aside from this, we know that in perpetual, the COGS need to be, a portion of the COGS need to be recognized as well, right? So we have debit inventory, credit COGS of 10,000 because that's the cost. In periodic, isa lang. There is no entry to match COGS. So this is the original, right? Let's have an iteration B. Sabi, it returned defective inventory with 20,000, pero ang binigay, realizable value of 5,000. So in iteration B, ang difference is ito costing 10,000, ito realizable value of 5,000. So here, it's still the same, pero rather than 10,000, yung i-recognize natin, it's debit inventory 5,000, COGS 5,000. So again, just take note of the difference. Again, periodic is the same. No entry to match the cost of goods sold. Right? Iteration C, paano naman kung it's deemed no longer saleable? The cost of the items is immaterial, right? So if the cost of the item is immaterial, we don't even have to match the COGS. So hindi natin babawasan yung cost of goods sold natin. Kapag immaterial yung cost of the items returned, zero to, no entry. The reason why I put this here is just to illustrate na wala kang i-reverse na cost of goods sold, right? Zero, because it's number one, deemed no longer saleable, and number two, and which is the more important one, it's immaterial, right? Iteration D, okay, it's no longer saleable, but the items are material. Now, this is where the major difference is, and kindly take note of this journal entry. So again, same entry pa rin, pero dito, rather than inventory account debit credit COGS, what will happen is that you will reduce your cost of goods sold for the amount which would be sorry, I think this should be 10,000. So basically ang importanteng malaman is the debit loss on defective inventory, credit cost of goods sold, right? So the idea here is that you will lower down your cost of goods sold, but you will recognize a loss on defective inventory because that's other losses because defective yung inventory mo. So it's just a recategorization of the expense, right? Unlike before na whenever we recognize it, tumataas yung asset natin. Bumababa si cost of goods sold, tumataas si asset natin. Because probably, this is something that we can sell again, right? But this one, since it's deemed no longer saleable, it's not an asset anymore. We just recategorize the expense, right? So debit loss on defective inventory, credit cost of goods sold. So kindly take note. In the simplified PowerPoint, these iterations are also there. So kindly double check them in the simplified PowerPoint. Yun. And then finally, nagkaroon ka ng last return, pero for this scenario, the merchandise was no longer required to be returned. So for this, no entry tayo. We don't decrease cost of goods sold, we don't increase inventory, no entry. So ano yung mga no entry? If it's no longer required to be returned, if it's immaterial, there is no need to recognize or de-recognize a portion of the cost of goods sold. Okay? Pero if it's material and it's no longer saleable, it's debit loss on defective inventory, credit cost of goods sold. Right? So basically, we go back to our original na, again, kung ito lang naman, granted an allowance costing 10,000, then it's debit inventory, credit cost of goods sold, right? So please make sure na you also understand the different scenarios. There were 5 scenarios. So if ano yung lumabas sa quiz or sa exam, make sure that you make the right entry. Okay? Super important na to because that will really affect your chain. So mag-chain yung errors nyo, and then as much as I want to give full points, magkakascade yun. So please master all 5 scenarios. Right? Yun. So with that said, we end with the discount. So kindly take note na lang on how to solve for discounts. But in essence, in summary, the differences are yung additional entries to match your cost of goods sold, right? So yung 5.2A wala at saka 6.2A. But all the same, all the rest, even in their names, are the same. SRA, SRA. Sales discount, sales discount. Freight out, freight out. So parehong-pareho lang talaga lahat. Except may additional entries lang si perpetual. So finally, just to end our review, we end our period. So in adjusting entries, we always follow physical count for perpetual. So madali na lang yun. Kindly refer to your 5.5 exercises in terms of paano mo i-adjust, right? See physical count to the physical count. Ang mas importante is that, so how do you recognize the cost of goods sold under periodic? So we go back to nuance number 1. Na temporary accounts lang si purchases, si freight, and si PRA and si PD. And therefore, we close them to the cost of goods sold account. And in essence, to simplify your analysis, purchases and freight in increases your cost of goods sold. And therefore, revenue minus cost of goods sold is equal to gross profit, right? So pag pinataas mo si cost of goods sold, bababa yung gross profit mo. So, example, your revenue is 200. Your normal cost of goods sold is 100. So 200 minus 100, your normal gross profit is 100. Now, if you purchase something or may freight in ka and then nadagdagan ng 50 si cost of goods sold, your revenue is 200, your new cost of goods sold is 150, so it increased the COGS. Your gross profit therefore would be 50. So for purchases and freight in, it increases cost of goods sold, but it decreases gross profit. So, as expected, kay purchase return and allowance and purchase discount, it decreases your COGS, but it increases your profit. So again, base scenario, revenue 100, COGS 100, revenue 200, COGS 100. So your gross profit is 100. Pero pag pinababa ng purchase return and allowance or purchase discount yung COGS mo ng 100 to 50, it's 200 minus 50, your gross profit would be 150. So again, for purchase return and allowance, your PRA and your PD decreases your COGS, and therefore it increases your gross profit. In table format, this is how you solve for this. Aside from the comprehensive income statement, please master this also. So again, since it's an equation, expect na butas-butas to, right? So, pare, baka ang missing is like purchase discount or freight in. You should know and you should master the differences, right? But generally, what happens is that you have your beginning inventory and then you add that to your net purchases. So what is net purchases, right? Purchases less PRAPD, and then when you add in freight in, that would be your cost of goods purchased. And then that would be your cost of goods available for sale. You subtract your ending inventory based on your count to get your cost of goods sold, right? So this is just the example. So please revisit this and master. Kasi I think in terms of the exercises, hindi siya masyadong napasadahan. Pero please be an expert in closing for your cost of goods sold. So kindly remember the journal entries on how to solve for your COGS, right? And then after nun, we close, right? So basically, you close your revenue accounts, you close your expense accounts, then you close your income summary, and then you close your drawings, right? So again, in terms of closing entries, concept 9, SRA and SD are contra revenue accounts, so they're in the opposite side, and then you'll squeeze the income summary. Freight out is just any sort of expense, so freight out cost of goods sold would be under the expenses. And then you'll ask me, so nasa na yung purchases, yung freight in, yung purchase return and allowance, and purchase discount? All of them were closed already to cost of goods sold, right? So all of them were already closed kay COGS, right? All of them. Si PRA, si PD, na zero out na yun lahat. Si purchases, na-close siya to get the cost of goods sold of 409,700. Right? And then here, in second closing entry number 2, this is 409,700. So actually, that ends our review for accounting for merchandising operations. Hopefully, that will help you master the concepts so that once you master it, mamaniin na lang natin yung quiz 4, right? So are there any questions before I proceed to chapter 6? Kindly thumbs up if everything's clear. Is there anything that you want me to revisit or review, right? Okay. So now we proceed to mastering our inventory. So chapter 6, like what I mentioned, chapter 5 is actually just fundamentals or basics. Chapter 5 was really all about providing you the context. Now chapter 6 is actually your first taste into what I call taking a deep dive into an asset, right? So for this, chapter 6 is actually a deep dive in terms of mastering our inventory account. So now, I don't know if good news or bad news for you. The good thing here is that you can actually parang segment key concepts when it comes to inventory. So key concept number 1 is dapat number 1, alam nyo when to recognize an inventory for an entity. So what are the classifications? What are the inventories you'll include? What are the inventories you'll exclude? So that's one thing that you have to master. The other things you have to master would be cost flow assumptions. So cost flow assumptions, dapat alam nyo, FIFO, LIFO, wave, moving average, weighted average, specific valuation. You should master all of those. And then, meron ka pang 3 others na short, pero medyo mahirap intindihin. So you have inventory valuation. So understanding how you value using lower of cost and net realizable value. Estimation methods. There are 3 estimation methods. And then there are inventory errors and then its effects, right? So marami siyang subtopics. So ang maganda dito, sa quiz, marami siyang probably, you can expect like 1 topic, may 1 short probably, right? So more chances of winning. However, super important to yung master because sometimes pinagmi-mix yung concepts. So, kuwari, magaling ka sa cost flow, pero nagkaroon ng estimation part or something, or nagkaroon ng inclusion part, malilito ka, right? So again, all of these 5 will be your roadmap. If perfect nyo si legal test, if perfect nyo si cost flow assumption, si inventory valuation, si estimation method, and the inventory errors, you'll get a perfect in chapter, your quiz for chapter 6, right? And honestly, since inventory nasama siya sa midterms, you can expect that the bulk of the midterms would be inventory, accruals, and deferrals, right? So ito talaga yung magpapabuhat sa grade niyo for midterm. So please, during the study break, focus on inventory, because I think naman chapters 1 to 3 are very conceptual. Na-apply nyo rin naman whenever you create your journal entries. Yeah. So with that said, now that we're aligned with today's overview for chapter 6, we first take a deep dive into recognizing inventory. And under recognizing inventory, there are 3 things that we have to discuss. Number 1 is classification of inventories. Number 2 would be just-in-time inventory management. And number 3, the most important part of this, is what I call inventory inclusions, right? So let's first go to number 1. So we have to classify our inventory. So this is a definition. Now, inventories are classified based on their company type, right? So if you're a merchandising company, madali lang. Your classification of inventory would be what you call merchandise inventory. On the other hand, if you're a manufacturing entity, your inventory will have 3 other classifications: your raw materials, your work in process, and your finished goods. So kindly take note that there are different classifications. Okay, merchandise, it's merchandise inventory, right? Okay, manufacturing, it's broken down into 3: RM, WIP, and FG, right? So in essence, the beauty of this is that saktong-sakto yung definition ng inventory to your RM, WIP, and FG, right? Raw materials are the ones, your inventory in the form of materials or supplies to be consumed in the form of the production. Your work in process, sorry, this is process, is in the process of production. And then finished goods are those that are held for sale. So again, if nahirapan kayong intindihin yung concept or i-memorize, just think of like the cooking, right? So your raw materials would be your ingredients. Kapag if they are in the process of parang naka-ref na siya pero nandun na yung lahat ng topics and all you have to do is oven it, that's a work in process. And then yung finished goods is pag na-bake mo na in terms of like the oven or something, then you will have your finished goods or your pizza, which is ultimately what you sell, right? But all of them, regardless of their state in the production process, are classifications of inventory. So is a raw material an inventory? Yes. Is WIP part of your inventory? Yes. Is finished goods part of your inventory? Yes. So, for example, in a manufacturing company, if you have RM of 50, WIP of 50, and finished goods of 100, and then we ask you, what is their total inventory? The answer would be 200. 50 from RM, 50 from WIP, and then 100 from finished goods, right? So now, basically, we're done with the classification of inventories, right? The next thing that we have to discuss is just-in-time inventory management. So this is actually more of practical appreciation. Pero syempre, I'm not sure kung lalabas na sa theory. But this is such a buzzword, particularly for the past 10 years. But sobrang nauso to sa ops, wherein it's called just-in-time inventory management. And to provide you with context, in essence, how companies view inventory is that there's a love-hate relationship with them. What do I mean by that? That you'd think na if you're running a business, the more inventory you have, the better, right? So for example, I'm selling glasses. If I have 10 billion glasses, you think that's a good thing because never ako out of stock, right? But the problem there is that if you have 10 billion glasses, you have to put that somewhere. So either magpaparent ka ng bodega, magpaparent ka ng warehouse, and then yung rent nun, parang it will increase in the based on the number of pallets na you have or the space na you take up. So companies, they don't want too much inventory because if I have 10 billion glasses, I have to pay so much money just to keep them. When in fact, hindi naman siya kailangan right now. Right? On the other hand, if kuwari nagbebenta ako ng bulaklak, and then ang inventory ko lang 5, and then Mother's Day, merong 200 na nag-order. Ang mabibigyan ko lang 5. So sayang yung 195, right? So if it's too little, pangit because it will go out of stock. If it's too much, tataas yung carrying cost ko. Therefore, companies want to find that perfect balance. And the answer that people came up with is what you call just-in-time inventory management, wherein you manufacture or purchase goods just in time when you need it. So basically, if forecast mo, ito yung demand, so ito lang yung kailangan kong i-order. Then pagdating na dito, magiging mga around, may buffer lang ako of inventory just in case dumami orders, and then I'll order again, right? So just-in-time inventory management has a huge advantage in an industry where products become obsolete overnight, right? So now that those two things are out of the way, let's focus on the first subtopic that you have to memorize and you have to perfect. Inventory inclusions. And inventory inclusions, you'd know it's an inventory inclusion problem if they ask you this one simple question: which goods should be included in your inventory account? So basically, bibigyan ka nila ng siguro like 7 scenarios. So itong goods na to nasa shipping dock. Itong goods na to naka-consign sa US. Itong goods na to binigay mo kay customer pero hindi pa niya binili. They're doing it on trial. Now the question is, are those goods still part of our inventory or not? Right? Kasi I feel like my basic understanding before of inventory is literally what you have in your storage. Bibilangin mo lang and that's your inventory. But that's wrong, right? Whenever you are asked what should be part or what should be included in your inventory, the very first thing that I want you to ask is, are we or is the entity the owners of the goods? If yes, regardless kung nasaan man siya, like even if it's in Antarctica, if we have the title to it, then it should be included in our inventory account. On the other hand, kuwari hawak mo na. Like nasa, as in literally parang it's in your warehouse alongside your other goods. But if you do not own it, it should not be part of your inventory. So in essence, every time someone asks you, is this particular scenario, should you include or exclude sa inventory? You conduct what they call a legal test. So basically, you just ask yourself, is the entity the owner of the goods? If yes, then we should include it in the inventory account. If no, regardless kung nasaan man yan, we have to exclude it out of inventory, right? So now, by applying the legal test, we already summarized the 4 major ones that should be included in your inventory. So what are those? Number 1, goods owned and on hand. Kindly take note na it's not just inventory on hand, you have to own those goods on hand. So usually, for this, it's based on physical count, right? Second, those goods that are in transit, right? So we'll be revisiting our freight terms. Pero if you purchase goods and you're the buyer and it's FOB shipping point, technically, even though it's in transit, you own it already. If you're a buyer of goods and it's FOB shipping, you own the goods already. So kahit wala pa siya sa warehouse mo, nandun pa siya sa barko, that should, like, I have 100 inventory in my warehouse. And then, merong parating na 50 na inventory. And it's FOB shipping and I'm the buyer. If I ask you, what is your total inventory? it's 100 of the warehouse plus the 50 in transit is equal to 150, right? Pag tayo naman yung nagbenta or we sold goods and we're the seller and it's FOB destination, that should be part still of our inventory. So for example, I'm selling glasses. Someone in Korea bought it or something. And it's FOB destination. Kahit na pina-FedEx ko na or something to Korea, if it's FOB destination and kuwari 100 yung nasa warehouse ko, 50 yung pinadala ko, kahit nandun na sa bar ko, since I still technically own it in transit, if I ask you what your inventory is, it's still 150. The one in your warehouse and the sold goods in transit, that's FOB destination. Number 3, goods out on consignment. So, we'll discuss that later, pero just make sure na if you're the consigner, you include all of your consigned goods, right? If consignee ka or tagahawak ka lang ng goods and you don't have the ownership or the title to it, you exclude. And then finally, you have owned goods temporarily held by others. So meaning, either it's in the hands of the salesman or the agent or held by the customer on approval or trial. So here, let's just quickly run down each of the concepts. So number 1 would be goods owned and on hand. So basically, this is just for appreciation, pero again, free game for theory. So basically, counting is normally done by employees who do not have custodial responsibility. Kasi to avoid conflict of interest. Meaning, kuwari, you have employee A. Ang charge niya is, siya yung mag-make sure na kompleto yung inventory. Hindi pwedeng si employee A yung papacheck mo na, uy, tama ba yung count? Hindi pwede. Kasi syempre, kung hindi tama yung count, siya yung siya yung lagot kapag mali yung count. So syempre, he can just, or she can just, change the count to best suit his needs. So therefore, if si employee A is the one that's in charge or in custody of the inventory, si employee B, who's not related to that, should be the one double checking. Number 2, each counter should establish the authenticity of each inventory item. So hindi lang pwedeng sa records, kailangan talagang pumunta sa warehouse, kailangan mo talagang bilangin. And then, there should be a second count by another employee. So employee C. And then, to help with this, basically, they also have pre-numbered inventory tags should be used. So all inventory tags should be accounted for. And then in the end of the count, a supervisor should check 2 things: that no items were double counted, and that all the inventory items are tagged or scanned, right? So in essence, as long as you have it on hand and you own those goods, then you are supposed to include it in your inventory. So, jumping a bit lang, if your goods, if you have on-hand goods but is under consignment from another company, meaning hindi mo ari, it should not be part of your inventory. Next, for goods in transit, you can categorize them into 2. You have purchased goods in transit, meaning tayo yung buyer. So pag FOB shipping point, we should include. Pag FOB destination, we should exclude. If we sell the goods, we're in the POV of the seller, baliktad. Right? So we exclude FOB shipping point, pero we include FOB destination point. So review, right? Kapag shipping point, the ownership passes to the buyer. Meaning, when it's in transit, who owns the goods would be the buyer. So pag shipping point, the buyer pays for the freight because the buyer owns the good during transit. On the other hand, pag destination point, in transit, ang may-ari pa rin is si seller, and therefore they pay seller the freight cost. Therefore, ito, clear sa atin to. So now, if we're in the point of view of the buyer, we need to include kapag shipping point. Pero if we're the seller, then we exclude. Kasi ang may-ari is si buyer. Sa FOB destination, kung tayo naman yung seller, then we include. Kasi siya yung may-ari. Pero kung tayo yung buyer, then we exclude. So again, please answer this, right? Huwag kayong malito. First question, are we purchasing or are we selling goods? If we purchase, we only include kapag shipping point. If we sell the goods, we only include kapag destination point, right? So, for me, I always remember this by PSP. So, PSP means purchase, pag purchase, shipping point, we include, right? And then SDP, right? So, pag sold, destination point. So, PSP and DSP, right? Pag purchase, tapos shipping point, we include. Kapag sold, and then destination point, we include. So, PSP, DSP, right? Pero, ideally, rather than memorizing, you understand why we have to include or exclude. And it's really all about the legal test. Kung sino yung may-ari, sila yung mag-i-include sa inventory. Last would be goods out on consignment, right? So, consigned goods meaning, ako yung may-ari, pina-consign ko sa friend ko, they have the physical custody of my inventory. Pero ang may-ari pa rin ako, right? So the formal definition is that consigned goods are held for other parties to sell the goods for them for a fee, but without taking ownership of the goods. Right? So I'm not sure kung nakapunta na kayo sa BA, pero hindi ko alam kung open, parang sarado pa ata yung building. I don't know. Pero kaya may co-op, right? And then nagbibenta ako ng salads. Rather than bibilihin ng co-op sa akin, i-consign ko na lang sa kanila. Like, ako pa rin yung may-ari ng salad. Pero pag nakabenta sila, I'll give them like a consignment fee, right? So, the idea here is that, kanino inventory yung salad? Sa co-op ba? Or sa akin? Siyempre sa akin. So, if you own it, even if it's in the consignee, then we include it in our inventory. So, if you're a consigner, you include. If you're a consignee, you exclude, right? So that wraps up our legal test. So let's apply inclusions. So Toledo Limited is trying to determine the value of its ending inventory. So again, alam mong inventory inclusion kasi they're asking for ending inventory. Pero hindi raw niya na-record the following transactions. Number one, on February 26, Toledo shipped to a customer goods costing 800. The goods were shipped FOB shipping. So it's in transit. So it's sold goods in transit and it's FOB shipping. So asking for class participation, what do you think? Include or exclude? Basically, ganito lang yung gagawin natin for inclusions. Kindly type in the chat if you think include or exclude. Okay, good. So, we exclude. Why? Because we're in the POV of the seller. The title already passed to the buyer upon transit. Therefore, hindi na natin siya ari. Right? And therefore, we exclude. Correct. Next, baliktad naman. Bumili tayo ng goods. FOB destination. Include or exclude? What are your guesses for these? Include, exclude. Okay, so medyo hati. Right? Okay, so again, let's analyze. Right? So we purchase the goods. We're in the POV of who? The buyer. It is FOB destination. Right? FOB destination. Therefore, while in transit, who owns it? The seller. Hindi tayo. So since the seller owns it and we're the buyer, we exclude. Right? So I understand it will take a while to simmer, pero kindly make sure na you master. Honestly, when I was in accounting, I just memorized PSP, DSP. So ito P. Ito PDP. Hindi maganda, parang pag PDP exclude, right? So pag PDP ayaw natin, or yung isa, yung yung isa is SSP. So PDP and SSP ayaw natin yun. Ang gusto natin PSP and DSP. Ganun. So basically, that's what I do. But I hope na rather than relying on that, you understand the underlying context. C. Nasa customer's warehouse raw on approval. Is this include or exclude? So again, hati yung class. But again, ito, may memorize na lang yung scenario, right? So own goods temporarily held by others. Technically, it's a customer on approval. Therefore, we include, right? Last, 3. Toledo also had 400 of inventory on consignment at Balboa Craft Shop. So now we have to analyze. We know it's all about consigned goods. Sino yung may-ari ng goods? The goods are currently at Balboa Craft. Therefore, we own the goods. And therefore, it's included. And then ito, purchase goods in transit, shipping point naman. So for this, is it include or exclude? Good. So see, that's good. Ito may consensus tayo. So we include, right? So PSP, we include. And then lastly, sold goods in transit, destination point. Include or exclude? Okay, nice. Okay, so tama. May consensus rin. So SDP, we include, right? So Toledo had damaged goods set aside in the warehouse because they are no longer saleable. These goods originally cost 400 and then kala niya mabebenta niya ng 600. So ito, this is a new concept, pero damaged goods. Learning from our chapter 5 review, is this something that we should include or exclude our inventory? The damaged goods. Okay, medyo hati. But again, if it's damaged goods that we no longer think it's saleable and it's material, then it's exclude, right? Because hindi mo na mabibenta. The definition of inventory is you expect to sell it in the future. But if it's no longer saleable, then it's not inventory, right? So kindly take note na pag damaged goods, it's not part of your inventory, right? So actually, yun lang naman yun. Now, honest, parang for chapter 6, I'm really gonna be taking my time. So rather than parang mababaw na overview, gusto ko deep dive per subtopic. So parang madali lang yung inclusions, right? Pero honestly, kapag exercises or even sa exam, lulunurin ka na nila sa maraming terms. So this is like a type of exercise. So this was an exercise last year. Last year kasi I was tutoring a friend for 99.1. And then parang actually inventory was the one she was asking help for. And then ito yung exercise niya. And then basically, we have this problem. Now, the problem states na meron ka raw inventory balance at year-end at 740,000. However, merong accountant na hindi siya sure about 1, 2, 3, 4, 5, 6. 6 items. So, sometimes nire-record niya, sometimes hindi niya nire-record. Pero ang gusto niya itanong sa'yo, what is the correct ending inventory? Right? So for these types of questions, so aside from knowing whether we should record or should not, there's a new framework na I want to introduce to you. So kapag inventory inclusions, you just basically make a table na may dalawang parts. Ay, tatlo pala, sorry. So here, you start off with your unadjusted ending inventory. Your main goal is to end up with the correct ending inventory. Now, in order to help us with the adjustments, the very first thing that we have to ask, or the second part is, did she or did he include it? So is it included? Yes or no. So it doesn't matter whether they're right or wrong. Did they include it or did they not include it? The next question is, dapat ba? Right? Should it be included? Right? And then you have a different effects regarding kung yes included, should it be included? Yes. Or no, yes, yes, no. So we'll see it play out. But in essence, may tatlong effects ka lang. Either you carve it out if it's included but it should not be included, or you add back if it wasn't included but it should have been included, or tama siya or we ignore, right? Walang effect. So we do number one. So number one is consigned goods. So the first question is, did they record it? Yes. Should they include it? No, because even though we have the physical, we're the consignee. And therefore, magkano yung relevant amount? 250,000 should be carved out. So they included it, pero hindi dapat. So subtract 250,000. Gets? So therefore, the net effect is sa ending inventory minus 250,000 because part siya ng 740 but then it should not have been included, right? So minus 250. Next, purchase FOB destination. So we ask ourselves, did they include it based on the given? No, hindi raw niya sinama. Right? So the physical count did not include. Now, is purchase FOB destination something that we should include in inventory? This is a PDP. PDP, ayaw natin ng PDP. So it's not included. Therefore, tama siya. Tama na in-ignore. So no effect. Third, included in the inventory account was office supplies. So they included it. But supplies, should supplies be included in inventory? No, because supplies is another account. Therefore, since in-include nila, pero hindi naman dapat, we carve out the amount of 17,000 of supplies. So again, so 740 minus 17,000. Third, sale, FOB shipping. Did they include it? No. So FOB shipping. Sitting on the dock and delivery. FOB shipping. Wait. FOB shipping. Yeah. Sorry. Sorry for this typo. But I think that so let's read the problem. So the company received an order on December 39 that was boxed and was sitting on the loading dock. The shipper picked up the goods on January 1 and delivered them on January 6. The shipping terms were FOB shipping. The goods had a selling price of 40,000 and a cost of 30,000. Okay, so now the question is, why was it included, right? Even though it's sale FOB shipping. It's because it was in the loading dock, right? So, na-pick up lang yung goods on January 1. So, initially, you'd think, SSP to. Meaning, it should not have been included. But, the title only transferred January 1, not December 31. Therefore, we include it kahit if it's still in our dock, right? So technically, it's still part of our physical count. So we add that back, right? So kindly take note of these nuances. So hindi lang importante na you know, like the initial concept, important also na you understand the context. So here, since nasa dock pa siya, kailangan natin i-add back, right? And then, ito may sales return. So basically, we adjust by the unsold ones. So nagkamali lang. Merong cost of 8,000. So basically, there's a difference of 52,000. Kasi sabi nila, na-charge sila ng cost of 60,000 pero ang totoong cost lang is 8,000. So we have to add back the 52,000 because that's not a sale. So if hindi siya benta, so basically the scenario was, kala nila nakabenta sila ng 60,000. Pero in fact, mali pala. 8,000 lang pala yung nabenta nila. Therefore, yung 60,000 na benta, hindi part ng 740. And therefore, even though nasa customer yun, since mali yung benta, technically that was not a sale. 52,000 out of the 60,000 was not a sale. And therefore, they are inventory. And therefore, we should add them back. Right? And then the last would be pag obsolete. Is it included? Yes, but it should not have been. So we carve out. And that's how you arrive with your ending inventory, right? So basically, this ends our inventory inclusion. So I know medyo magulo pa siya right now, pero gusto ko lang mag-deep dive na now para lang you understand na it can get complex. And the only way you'll be able to master this is by answering a lot of exercises and reading a lot of context. Like, ito nasa doc, ito nasa salesman, nung ganitong date, ganun. So make sure na you come up with the bank na, itong scenario na to, kailangan include. Itong scenario na to, kailangan exclude, right? So now we're in the last topic, which is cost flow assumptions. So actually, ito lang yung main goal ko. Parang I want everyone to not get overwhelmed with FIFO, LIFO, and other cost flow assumptions, right? So basically, for cost flow assumptions, I want us to go back na for inventory, there are literally two things we care about. The quantity of our products and the cost of our products, right? So there are only two things that are very important in inventory. The volume of your inventory and the value of your inventory. The quantity and the cost. Now, in order to track this, we basically created a cost flow last time, wherein we said na the beginning inventory, you add your purchases, that will give you your cost of goods available for sale, or allow me na lang to use COGAS or something, COGAS, whatever. Ang haba kasi. And then, yung COGAS natin, either we sell it or we don't. So if it's sold, your COGAS becomes cost of goods sold or COGS. Or pag hindi siya nabenta, it becomes ending inventory. So now, bago kayo parang ma-overwhelm sa 6 scenarios in cost flow assumptions, I want you to know na literally for all of these types of subtopics, dalawa lang naman yung itatanong dyan eh. How much is your cost of goods sold? And how much is your ending inventory? As long as you master na gets nyo na your cost of goods available for sale eventually will become either a cost of goods sold or ending inventory, then you'll be able to follow the thought process behind cost flow assumptions, right? So to formalize this equation, this is the table format. Beginning inventory plus purchases is equal to your COGAS less your ending inventory is equal to your COGS. Or if you're a more visual person, basically add your purchases to your inventory so that you know your total cost of goods available for sale. And then you know that the cost of goods available for sale, either it will go to your cost of goods sold or it will go to your ending inventory. So let's imagine this. Let's say I'm an owner, I'm a seller of drones. So drones, kasi parang wala. It's pretty cool, right? So I wanted to buy like a DJI Fly or like a DJI Mavic 3, right? So let's say I bought like a DJI Fly, which is roughly around like 400 USD, right? Pero for this particular scenario, let's treat it in pesos. So in September 1, I bought 10 units for 20,000 each. So 200,000 siya. Now, in September 9, I bought again units. 10 units, same amount, so 200,000. And then September 15, 200,000. So in the chat, kindly tell me what is our cost of goods available for sale. Sorry, should be purchases, right? So what should be your cost of goods available for sale in terms of quantity and in terms of cost? Like how many units do I have in total that's available for sale? And what is the total value? can anyone, so for those try to solve, what are your guesses? Okay lang, go ahead and guess lang. Okay. Correct. So, thank you. So, madali, right? So, we have 30 units. So, 10, 10, 10. 30 units. And then I had the total cost of 600,000 because at 20,000 each, right? So, this is your cost of goods available for sale. Now, during September, we sold 16 units. So, if we sold 16 units, 30 minus 16, alam ko na, I sold 16, so 14 yung natira. Right? And then, since I sold 16, those should go under my cost of goods sold. Right? So, we know the value. So, 16 units are treated as cost of goods sold. And then 14 units are treated as ending inventory. Now, the question is, what should be their value? What is the cost? So, alam na natin yung quantity, check. Yung cost na lang nila. So, since madali lang, kasi yung cost per unit natin is the same for all three accounts or for all three purchase batches. So, it's just basically 16 units times 20,000 is 320,000, right? And then I know that my COGAS is just goes to two accounts. My cost of goods sold and my ending inventory. So I can definitely solve na, okay, ang COGAS ko is 600. If ang COGS ko is 320, alam ko na ang ending inventory ko should be 280. Which is what yung lumabas, right? But in essence, what happened lang is 16 units times 20,000 is equal to 320,000. And 14 units times 20,000 is 280 units, right? So basically, that's the beauty of the cost flow. So madali lang. So honestly, in the perfect world, this is what happens, right? But unfortunately, mas realistic na not your cost per unit every time you buy changes. Why does it change? Classic example. Humina yung peso. Ay, sorry. Hindi pala humina yung peso. Supposedly, lumakas lang pala yung dollar or something. So, since lumakas yung dollar, parang mag-reach na tayo to parang 60 pesos to a dollar. Siyempre, tataas rin yung cost per unit natin, right? So, for September 9, yung cost per unit mo became 30,000. And then on September 15, mas lumakas pa yung dollar supposedly. Naging 40,000 na siya. So, now, nag-iba na yung cost of goods available for sale ko. I still have 30 units, so same quantity. But my cost drastically increased to 900,000. Right? Because yung cost per unit ko for this is 30,000 in purchase 1 and purchase 2 it's 40,000. Now, I sold 16 units pa rin and 14 units sold. So now, magkano yung cost of goods sold ko? Dati, madali lang because I multiply 16 to the cost per unit. Pero which cost per unit should I use? 20,000? 30,000? 40,000? You don't know, right? You don't know. So, basically, in this altered scenario, nagkakaroon lang naman tayo ng problema because whenever you purchase, your purchase price changes every time you purchase. So, purchase 1, I had 30,000. Purchase 2, I had 40,000, right? So, your prices are rising. So now, what will you do if the cost per unit changes per order? This is the beauty of cost flow assumptions. So, since maraming pwedeng interpretations, you have to be clear what assumption your entity is using. There are 4. Specific identification, first in, first out, or I'll call FIFO, last in, first out, which I'll call LIFO, and average cost, that I'll call WAVE, right? So you have 4. Specific identification, FIFO, LIFO, WAVE, right? So for specific identification, basically, madali lang. Just tag everything. Tag an item, have a specific identification tag for each item. However, this is cumbersome, and particularly specific identification assumption is limited to the variety of high unit cost items. So, pero the good thing here is that it parallels the actual flow. So basically, for specific identification, so that we'll know our cost of goods sold or ending inventory, literally, I have to count the 14 remaining in my inventory. So ito, ang natira pala si 1, 2, 3, 4, si 11 to 14, si 21 to 24, and si 25 to 26. So now, medyo ma-attribute ko na kung ano yung cost per unit nila for each of these units. Ito, batch 1. Ito, batch 2. Ito, batch 3. So as you can see, 30 items pa lang, hassle na gawin. Imagine if you have a volume of like 100,000, right? So the limitation of this is that it's hard to track and it's not for easily interchangeable items. Like for example, ito, how can we know na it's DGI 12, right? Like, except with the tagging. So, pwedeng madaling pagbalik ta rin. So, actually, specific identification has a very limited use to those that have limited variety of high unit cost items. So, ito, correct, drone. Technically, mura lang siya, right? Unlike like a Lamborghini. Like a Lamborghini that's like customized, probably just sells like, onti lang yung volume nila. So for those, specific identification makes sense. But for parang something that, has a lot, like a t-shirt, specific identification won't work. So now let's solve for our ending inventory. So I know that batch 1 costs 20,000. So in batch 1, 4 yung natira. So 4 times 20 is 80,000 to. Batch 2, 4 rin yung natira. So 4 times 30,000, kasi 30,000 yung ginastos ko for batch 2 per unit, is 120,000. Batch 3, 6 units yung natira. 40,000 ko siya na bili, so 240,000. So we just add, right? So 14 yung natira, batch 1 costs 80, batch 2 costs 120, and batch 3 costs 440. So in essence, 440,000 yung ending inventory mo, the value of your ending inventory. Now, you can do the same exercise na, si 5, 6, 7, 8, 9, 10 na benta, but that's too cumbersome. What you can do is then plug in muna your ending inventory. This is the one we were able to solve. Now, we know, because of the cost flow assumption, that our co-gas is 900. And yung 900 mo, i-allocate mo lang naman either a portion of the 900 will go to ending inventory and then the remaining portion will go to COGS. So 900 minus 440 is equal to 460,000. So your cost of goods sold under specific identification is 460,000, right? So we're done with specific identification. Cost flow assumption number 2, FIFO-lish, right? FIFO-lish. So first in, first out pertains to your COGS. Lish means last is still here, which pertains to your ending inventory. Meaning, in FIFO-lish, you assume that the earliest goods are the ones that are first to be sold. So the first in are the ones first out or first sold, right? So maganda dito, it parallels the actual flow of inventory. And periodic and perpetual result to the same ending inventory. So let's go back to the example. FIFO-lish. We sold 16 units. So among these three, which one yung pinaka nauna? First in is this one, our beginning inventory. First in, September 1, nandito na siya. So therefore, I know that 10 out of the 16 units were from this batch 1. And then the remaining 6, kasi first in, first out, the 6 out of the 16 were from batch 2. So to determine my cost of goods sold, I sold 16 units. So inubos ko muna si batch 1, 10 units, 200,000. And then yung spillover kay batch 2 ko na sinunod. Kasi first in, first out. Kasi ito yung pinaka nahuli, right? So 6 units, 30,000. So my COGS is 380,000. So without even solving for ending inventory, my expectation is my ending inventory should be 900 minus 520. But another way of solving for this is kung ito FIFO, ito lish, last is still here. So apologies, this should be batch 3. So batch 3, 14 units. So batch 3 has 10 units. So ito muna, this one, last is still here. And then the remaining 4 probably was from batch 2. Kasi siya yung last is still here. Siya yung relatively last. So 400 plus 120 is 520. So in essence, ganun lang. FIFO-ish, right? And then we have LIFO naman. So FIFO-ish, LIFO-fish, right? So last in, first out, first is still here. So LIFO pertains to your COGS. Fish refers to your ending inventory. So yun, baliktad. It's the latest goods purchased or first to be sold. Pero the key difference here is kindly take note na pag perpetual or periodic, magkaiba sila. I'll talk about that later. So conceptually, basically, LIFO fish, your cost of goods sold will then be yung pinaka-last, yung una nating ititreat na nabenta. So now, the 16 units will be comprised of the 10,000 from batch 3 first. The 6 units will be from batch 2, which will give us a COGS of 580,000. And then, ending inventory of 320,000 because first is still here. First is still here. So 10 of the first is still here, and then 4 of the first is still here from batch 2. So 320,000. So lastly, we have wave, or basically you have your weighted average method. In essence, sinasabi niya, weird, why do you parang do it na LIFO or FIFO? Why don't we just average the units? We have 900,000 units divided by 30 units. Sorry. 900 divided by 30. Our cost per unit is 30,000. Our average cost per unit is 30,000. So, gawin na lang natin, 16 times 3, 30,000 is equal to 480,000 COGS. And then 14,000 times 3, 30,000 average unit, 420, right? So that's another interpretation. So now, cost flow assumptions, again, don't get overwhelmed. Cost flow assumptions only ask you to solve for cost of goods sold and ending inventory. And as you can see, different assumptions give us different cost of goods sold, different ending inventories. But our cost of goods available for sale still stays the same. So now we can make generalizations. In the period of rising prices because si batch 1 costs 20,000 per unit, si batch 2 30,000 per unit, 40,000 per unit. Sa FIFO, our ending inventory is high. 520, it's the highest. And our gross profit, therefore, is also high. Our cost of sale is the lowest. Right? Baliktad kay LIFO. Si LIFO, ang ending inventory niya is 320,000, pinakamababa. So it has low. And then yung gross profit is low also. And then yung cost of sale is the highest. 580 to out of the 4 assumptions, right? And then si average cost, saktong in the middle, right? 480, 420. So baliktad kapag decreasing prices. So kindly memorize this or kindly understand na in the period of rising prices, in the period of decreasing prices, baliktad. So si FIFO low, si LIFO high, yung ending inventory niya. And what we can see here is that generally, FIFO follows the flow, while LIFO goes against the flow. So meaning, since rising prices, mataas rin or directionally proportionate si ending inventory. So pataas si price, mataas si ending inventory. Si FIFO. Bumaba si price, mababa si ending inventory. Si FIFO. Baliktad si LIFO. Rising prices, bababa si ending inventory. Right? Decreasing prices, tataas si ending inventory. So kindly take note of these situations. So now, actually, there are 4 assumptions, but hindi accepted si LIFO. So in advanced accounting, we never touch upon LIFO because it does not follow the matching principle, right? So regardless of your assumption, it's very important that you remain consistent with your principles, meaning you have 4 options: specific identification, FIFO, LIFO, or wave, right? But once you start using FIFO in year 1, you have to use it every year in the next succeeding years. Kapag nag-iba ka, you have to disclose that. Because we have to follow the consistency principle, that the company should use the same accounting principles and methods from year to year, right? So actually, this officially ends our conceptual lecture for today. However, for the next 15 minutes, so I will just discuss this so that ma-upload ko yung recorded. So again, I want to take a deep dive na into how do you actually solve for FIFO, LIFO, fish, and wave. Now, let's learn the difference in computing. So, tatlo lang sila. Kasi si specific identification, manual yun ginagawa. Pero, ang nagpahirap, may dalawa pa tayong inventory system. So, meaning si FIFO can have a perpetual, can have a periodic way of solving. Si LIFO and si wave, the same. So, you have 6 scenarios. Now, I've already identified what kind of method they are. For FIFO, I personally call this quantity method. So, I'll show you how to solve for FIFO. And ang maganda kay FIFO, regardless kung perpetual or periodic ka, it will give the same results. Kay LIFO, hindi. Because kay periodic, we still use the quantity method, pero kay perpetual, we use the stock card method. And then kay wave, we have moving average and weighted average for different results. So now, let's take a deep dive. Kay FIFO muna tayo. So this is the data. So this is the data that was provided. January 1, may beginning balance ka. In 8, may sale. In 22, may sale. And then in 18 and 31, may purchase. So the quantity method goes like this. Don't get overwhelmed with all of the given. Focus on the quantities. Step 1, get the ending inventory quantity. How do we solve for that? What is our cost of goods available for sale quantity? 2,000 units. How did I get cost of goods available for sale of 2,000? 800 plus 700 purchase plus 500 is 2,000 quantity, 2,000 units of our cost of goods available for sale. Now, how many did you sell? 500 plus 800 is 1,300. So now we just subtract both to get the ending inventory quantity. So now we're done with step 1. Since alam na natin yung ending inventory quantity, we just have to get the cost, right? So para alam natin yung ending inventory value. And how do you do that? We know that there are 700 units left. So now we're in the lens of a FIFO-lish. Since ending inventory yung sinosolve natin, lish. So last is still here. So in the 700 units, ang una nating uubusin yung last batch. So my last batch is purchases of 500 units. So I will put 500 here. And then this is the corresponding value. E may 200 tayong natira. So those 200 will be coming from the second batch. So 200 out of the 700 will come from January 18 purchase. And then this is the amount using their unit cost. So 500 times 220 is equal to 110. And then 200 times 210 is equal to 42,000 total cost. So now we know our ending inventory cost of 152,000. And then lastly, madali na lang. We do the cost flow. Ending inventory is 152,000. We know na 160 plus 147 plus 110 is equal to your cost of goods available for sale at 417. You carve out your ending inventory cost so that you can get your cost of goods sold at 265,000. So again, CGS and ending inventory lang hinahanap natin. So regardless kung periodic or perpetual, you solve the same, right? So si FIFO madali. That's how you solve the quantity method for FIFO. And the good thing is, regardless kung periodic or perpetual, it will give you the same results. Same COGS of 265,000, same ending inventory of 152,000. Now, si LIFO fish, nagkakaiba tayo ng results. So let's go first in the periodic. So pag periodic, quantity method. So same pa rin. Get the ending inventory quantity. So 700 units pa rin yung ending inventory natin. get the ending inventory cost. Now, bakit nag-iba? Kasi LIFO, fish, first is still here. So how we value the inventory is that the 700 units, I will first zero out yung January ko. Kasi first is still here. And then sakto, 800 units pala yung nasa start. Meaning, yung 700, all of them came from the first batch. Yun yung natira. Right? So, times 200 is equal to 140,000. Ang ending inventory ko is 140,000. And then, we do the same. We do the cost flow. So, subtract your ending inventory cost of 140 to your cost of goods available for sale of 417. To get your cost of goods sold at 277,000. And of course, your ending inventory is at 140,000. So now, we're done with the quantity method. So we're done 3 out of 6 is quantity method. So madali lang, right? So now, nagkakaroon ng complexity kapag LIFO pero perpetual. Now, kapag LIFO and perpetual, we really have to make a stock card. Okay? We have to make a stock card, right? Because the difference is, si periodic, they only account for it at the end of the period. So, syempre, ang first is still here will always be your beginning inventory. Pero, in reality, for perpetual, every time you make a sale, magla-LIFO fish ka. So, anong ibig sabihin nun? We make a stock card. And your stock card will be composed of 3 columns. 3 groups, right? Your purchases, your sales, and then your running balance. So first, we use the stock card to get our ending inventory cost. So how do we go about it? We go to January 1, and then we just plug it in. 800 yung units, 200 yung cost per unit, and then total cost is 160, right? Then we go to our January 8. Meron raw sale. So ito yung balance natin. So we just carried out. So balance of January 1. Pero nagkaroon raw ng sale. So nagkaroon ng sale, we put it in the sales column. So less 500 units, less 100,000. So now, our balance is from 800 units, nabawasan ng 500 units. So 300 units na lang, pero 60,000 na lang yung total cost. Now, bumili raw tayo ng 700 units. Pero now, iba yung unit cost at 210. So, we just list it down. So, we have 300 units at 200 CPU and then 700 units at 210 CPU. So, in terms of our balance, we're not gonna total them. We have 2 rows. One for batch 1, one for batch 2. Right? 300 at 200 and 700 units at 210. Then, nakabenta ka na naman. Now, pag nakabenta ka, that's when you apply your LIFO. LIFO. Last in, first out. So nakabenta ka ng 800 units. So last in, first out means that ito yung last, meaning you have to zero this out first. So 700 units at 210 will zero it out, and then yung spillover na 100 will subtract from the 300 ng batch 1 of 100 units. So yung balance mo na lang is 200 units of batch 1 at 200 at 40,000. So, LIFO, so yung last in, which is the 700 units, first out, yun yung unang nabenta. Kaya wala na siya. And then first is still here, si 300, naging 200 na lang kasi na-subtractan ng 100. And then, we bought, purchase of 500 units. So now, may 2 batches tayo. 200 units at 200 and 500 units at 220. So by adding that together, you have 150,000 ending inventory cost. So the reason why pinipilit kong masama to is that I know it's cumbersome, but it's very procedural. As long as you understand the procedure, you don't have to be scared of cost flow assumptions, right? So now that I know my ending inventory, we can do the cost flow, right? I know that my cost of goods available for sale is 417,000 because 160 beginning balance plus 147 plus 110 is 417. And then 417 minus my ending inventory, 150, 27. And as you can see, if your inventory systems are different in LIFO, it will give different results, right? So last is wave. So sa wave, magkaiba rin sila. So now, one of the things I want you to note is that sa wave, your pag perpetual, you call it moving average. So I'll show you why it's called moving average. Because the average moves every time there is a purchase or a purchase return. Again, for perpetual, it's called moving average because the average moves every time there's a purchase or a purchase return. So how do we do the procedure for moving average? So basically, you just list down. So 5,000 units at 200 is equal to 1,000,000 for January 1. May purchase tayo. So every time you have a purchase, mag-move tong average. So at 250. So technically, I know that it's 10,000 units because it's 5 plus 5 is equal to 10,000 units. And then my total cost I know is 2.25 million. Now, we need to get the average. So total cost of 2,250 divided by 10, this is in thousands, is 225. So now my moving average is 225. So kindly take note, this is your average. Okay? So now, when I sell something, I will not use 200 or 250. I will use the current moving average of 225. So that when I balance, I have 3,000 units at 225 each at 675,000. Right? And then, nagkaroon ng sales return. So how do you value your sales return? Still at the moving average of 225, right? So now, tumaas ng 4,000 units and then naging 900,000. Now, why is it called moving average? Because the average moves every time there's a purchase. In January 30, there's a purchase, 150. So, we know that the balance for units is 20,000, right? 4 plus 16 is 20,000. And then 2.4 million plus 9 is equal to 3.3 million. So 3,300 divided by 20 in thousands is 165. So now, yung moving average natin is now 165 from 225 in terms of our balance. So again, every time there's a purchase, nag-move yung average. So now my average is 165. So pag nakabenta ako ng let's say 2,000 units, it's not gonna be at 225, but now at the current moving average price of 165. And then may purchase return ka at 150 pa rin, kasi 150. Meaning, it will again move the average, kasi may purchase return. So now, it's 3 million divided by 18, 166, or 167 when you round up. And now, you have your ending inventory for cost. Right? So now we know that ending inventory for cost, where do you get your cost of goods sold? In your sales rows. So sales minus sales return is cost of goods sold of 1.35. So now we know that the cost of goods sold is 1.35 million. Our ending inventory is 3.3 million, and our cost of goods available for sale when you add them together is 4.25. So that is the perpetual moving average. So the last one that I'll discuss is wave or pag periodic. Pag periodic, mas madali. Basically, all you care about would be your purchases or your COGAs, right? So basically, list down all of your purchases. So 5,000, 5,000, 16,000 minus 2,000. So you have a balance of 24,000 units. And then you have 4.35, which is your cost of goods available for sale. Yung 4,350, cost of goods available for sale, divide mo by the units. It will give you a weighted average of 181.25. Weighted average of 181.25. So now, we know that the cost of goods available for sale is 4.35 million. And then it's all about just using this to wave unit to subtract or to identify your ending balance. It's already stated that 18,000 units out of the 24,000 units were remained in the inventory. So I know that 18,000 units times 181.25, which is the wave, is 3.262 million. And then, if 18,000 yung natira, 24 minus 18, I know that my cost of goods sold is 6,000 units. Multiply pa rin with the wave of 181.25 or 1.0875. So that will give me both my cost of goods sold and ending inventory. So again, they're very different. And because sa perpetual moving average kapag periodic weighted average. But in essence, that's basically cost flow assumptions. So basically, ito yung quote-unquote pinakamahirap in terms of comprehensive problem. But then I hope na initially for this deep dive, you have a clear understanding na on parang how to solve for them. So actually, this ends our chapter 6 discussion. So thank you so much. So are there any questions or clarifications? And then before we end, just reminding everyone that there's a quiz on Monday and then our exercises are due on Thursday. Then kindly check over the weekend your emails and your Facebook group for any other announcements. So yeah. So if there are none, I will officially end the recording.